folks, Dan Frio here with your live midday report. So we're going to start doing this every day, the best I can at 1 o'clock. So the new format's going to be, I'm going to post in the morning, the mortgage minute, and then between noon and 1 o'clock, I'll give you a live report of the live market, what's going on, and the reactions that we're seeing real time in regards to mortgage rates in the real estate market. Then I'm going to give you news that I accumulate through the day to keep you abreast of the market. So if you're a realtor out there, a consumer out there, you're a mortgage advisor out there, I'd love to have you on here. So where our goal here is to educate and inform you guys everything real estate, especially when it comes to the financing. So here's the chart of the day, guys. This is what's happening with the MBS market. Hope my audio is okay. I got a new computer and I'm having some fluctuations here, but here's what we see right here. But this is the backdrop of what I see on a daily basis. But the news here is seeing that there's a ton of houses being constructed that are coming to market. So this is we monitor here is the supply demand of everything. And that really what creates the value or the price of an asset. So right here, we're going to see that the housing market is getting a lot of supply from builders out there. The MBS market's going on right here. I'm going to focus in on that in a second. But let's get over to the other economic news that we have out today that's shaking the market. Right here, current housing market. The cool thing about this is what I like here is it's starting to cool down. You know, we said that house prices are going to, I hope they get to the point they're stagnant for a little bit. It could be stagnant for a year or two. I'm okay with that. Because the exuberance in the market is just crazy at this time. But we got some good news. Look at the news out. This is a guy that I follow. I'm going to start doing my best to put these links down below. But look at this. The current state of the housing market you see right here from Denver, the Association of Realtors. Modest numbers this month became a sign that the market has returned to a semblance of normal. We're starting to see some normal back or over in the Denver area. How about Vegas? The slowdown in sales and increase in our housing supply are signs that things may be starting to cool down or calm down. Like it. I'm not afraid of the housing market or the bids or the exuberance to start to deplete. Seattle, Mike Larson, a member of the board of directors at Northwest Multiple Listing Services, the MLS, who lists all the properties, describes the market as more balanced and not so crazy. So we're starting to get some good news there. And again, from the mortgage news monitor alerts I get, we have new constructions are coming in robustly. Economic calendar for today. There's really not much in today's mix that we're going to see. Oil inventory came out. This is the calendar that I watch on a daily basis. Well, you might ask, why do you watch these things? Well, everything right now is tied around the Fed. If you're watching the stock market right now, you're probably like, oh my God, it's down another 300 points. Okay, so the reason being is, what's the Fed's next move? Are they going to quantitative tightening? They're going to do other things, and that's what we talk about on the show. Jamie Dimon just came out this morning and said the Fed has to QT. QT means quantitative tightening. They need to sell mortgage-backed securities bonds. So if this is confusing to you, this is why you subscribe to my channel, so I can educate and inform you guys everything real estate. But the rest of the news today or this week is basically a jobs report right here. That's coming out tomorrow morning. I don't know what that number is going to be, but if it's a big number one way or another, we might see some fluctuation in the market. The Fed is looking to slow down employment a little bit. They really want to slow down the growth of the assets prices, but that's going to be hard to do with gas prices the way they're going. But good news out today is gas inventories are up. They're up pretty substantially. The last reading we had was down 5 million barrels. The expectations were we were going to be down about 2 million barrels. We came in up 2 million barrels. So that might help at the pump. Core CPI or consumer inflation index is coming out on Friday. That's a big number, but the drum roll is the Fed. The Fed's meeting next week. Here's the Federal Reserve chart when they meet. I have this right on my desktop because they play a huge role in all this. So you can just Google when's the Fed's next meeting. It is next week on the 14th and 15th. I'll be bringing you live, hopefully, when the Federal Reserve Chairman starts his speech on Wednesday. I'm going to try to do that live and decipher it for you guys. What is he actually saying? What do we look for? What are key trigger points that he's saying or not saying? Those are the things that we're focusing in on here. So let's get over where the MBS market's doing today. There's not much news out, but again, usually the days coming up to the Fed meeting is shaky, and especially when the news coming out in the next 2 days are two areas that they play a big role in. The Federal Reserve has two mandates. I'm not sure why my videos are so dark, but the Federal Reserve has two mandates. The mandates are full employment. So we watch the employment numbers, and inflation, okay, price stability. So that's one of the reasons why I watch gas prices. What's your biggest cost? What's your biggest piece of inflation in your life? Okay, if you already have a house or you're renting, that's out of the equation because it really hasn't moved. Well, you got energy, which is gas at the pump, food. I mean, both those things are going out the roof. So let's dive into what the MBS market's doing after we review all this data. Well, it's all over the board, but the good thing is it's kind of flat within the last where we started. But let's go to a 2-day chart. This was kind of exciting news yesterday. We had a lot of repricing. So this is my MBS chart. Okay, for the newbies out there, I'll go through it real quick. This is the bond that trades on Wall Street that determines your mortgage rate, the biggest component, okay? So when this price goes up, rates are coming down. You can see in this chart that every time a bank or a lender republishes their rates, up or down, we're going to get a little blip in the radar right through here. You can see through here, and I'll highlight this. Mr. Cooper, you can see that. Yesterday, 6/7 at 1247, they reduce their rates. So this is how we stay in tune with the markets and what lenders are doing what. Because if I have your application, I'm like, hey, I'm looking to do something here. I go to here, who's reduced their rates recently or faster than the next, and let's grab it. Okay, so that's what we watch here. Let's look at a 1-day chart because I think we might have hit a bottom. It's probably easier seen on let's go to a 6-month chart. 6-month chart, you can see this is the price of the bond. As this goes down, like I said, mortgage rates are going up. This might be a short-term bottom. We will find out next week as the data gets compiled and the Federal Reserve comes out and gives us their information. We'll have a more definite beat on the market and what the anticipations are. So what's expected next week is the Federal Reserve is going to increase rates 50 basis points, the federal funds rate. Guys, let me explain the federal funds rate real quick for you because, again, our goal here is to educate you guys. The Federal Reserve controls one interest rate, and it's the federal funds rate. It's how much when a bank needs money and they get money from another bank, it's the interbank lending rate. Okay, it usually has a trickle effect into the consumer piece of the economy, meaning consumer credit cards, the prime rate, car loans, all short-term things. Long-term rates are controlled by the mortgage-backed securities market. So if you have any questions, please post them. I will take some questions if you have them. I apologize. Yesterday was a complete debacle. We had some time issues with some people, and we had somebody had some issues that weren't able to attend the live event. So that's what happened. But we will be back tomorrow night to answer all your live questions. But I'm going to do this every day at 1 o'clock. I'll come in, tell you guys what's going on in the market and why, answer any quick questions that you have, and move on. You can go back to work, and I'll do what I do. So if you have any questions, please post them. If not, please don't forget to give us a thumbs up. It helps the algorithms help us get noticed more so we can help more consumers. My name is Dan Frio. I do this every day. My team is now out there. We are on a national level. We joined Allied First Bank. We are now federally chartered, but we're still a broker. We can use the bank's products, but they're allowing us to broker loans out so we can make sure you guys are getting the best rate in the market. What's interest rates? They are, let's go over to the mortgage, let's go into rates. What I do is I show you guys what's happening from Mortgage News Daily because they're probably the easiest thing to follow. You're going to see rates across the board are up just a little bit, 0.1, 0.1, 0.1. They're probably going to move some more because this adjustment right here, I'll go back to the 1-day chart. We are down right now on the MBSs. 25 basis points. So usually that equates out to about a 5 to 8.08 adjustment to rates. Let me explain that to you. So when you're looking at this rate, probably don't be surprised if by the end of the day, this rate is 5.54, up 5 basis points or so. When I talk basis points, it's this number right here, the change. Okay, right now the 30-year fix coming in at 5.49, up 0.01. That 0.01 means 1 basis point. You're also going to see the 15-year fixed is up 1 basis point as well as the FHA. So these are where rates are today, according to Mortgage News Daily. What they do is they do a survey of lenders all over the country, and they compile this data. So what I want you to focus in is not the exact rate, but the direction things are going. Also down here, the sentiment for today. When you see negatives, that's an indication that most likely rates are going to increase a little bit more than what they've already adjusted. So that's the report for the day. If you have any other questions, please ask them. Otherwise, I will be on my way and let you guys go. I'm trying to do my morning update. It'll be now called the Mortgage Minute. So I'm trying to find some subject lines and so forth to put in there. But if you guys want to help me name that thing, please just shoot me an email, or I'll put something on a comment page so you guys can help me name my morning update. And we're also spinning off another YouTube channel to be more just educational for consumers looking to figure out what kind of mortgage program is best for them. So, we have a question. And let's see what we got here. Hi, Dulce from Arizona. If I make a 50% down payment, what would rate be lower? Yes. So here's how mortgage rates work. The biggest piece of the puzzle is your credit score. That's probably the biggest element there. We did a live event yesterday with Sam Parker. He's the CEO of My Credit Guy, fantastic credit restoration company. And he's been doing the credit restoration or in the credit field since he was 18, and he's 36. So he's been doing it 18 years. If that kid doesn't know what he's doing, I don't know who does. That's why I had him on my channel yesterday, because he's educated me. I actually created a website with his assistance, and it's right here. It's really simple. It's called creditscoresandmore.com. And that's where you can get your credit scores and so forth. But to answer your question, basically is your credit score holds the most weight. And then the more money you put down, meaning what we call the loan to value. So your loan to value is basically your loan amount divided by the value of the property. So as you pay more and more down, your loan amount goes down. So it reduces what we call the loan to value. As the loan to value goes down, it's less risk for the bank, so you get a better rate. So the things that could really help you with the rate piece of the puzzle, better credit scores, number one, possibly more money down. Sometimes that always doesn't work, okay? And then the other elements of the equation is, are you purchasing as a primary residency or an investment property? Primary residencies are cheaper, have better rates, okay? What kind of term are you taking? 30-year, 15-year, 20-year, adjustable rates, so forth. Those are things we can help you with. So those are the main pieces of the puzzle when it comes down to what the mortgage rate is. But they fluctuate, as you can see right here. It fluctuates down through. Here's the basically things that are going on over here. You're going to see it. They're adjusting by the second. Basically, almost every trade that takes place, we see. All right, Alex, let's see what Alex has to say. I locked in on a 10-1 ARM at 3.625 3 months ago on my new build, closing in 4 months with the option to switch to a 30-year fixed at that closing. Do you think I'm going to use that option? I mean, 4 months from now, here's my perception of what's going on. The markets need stability. So I'm still going to be on the fence. I think inflation's going to be transitory and going to kind of come down fairly quick, as fast as it went up. Why? Okay. I don't know about you guys. On my way to work, just in the past week, prices at the pump went from $5.05 to $5.55 to $5.89. They're going to be at $6 by the end of the week here in Chicago. Gas prices are crazy. Your gas prices, I bet you, are crazy. They're going to add $200, $300, $400 a month easy to your monthly expenses. We're going to have to start cutting back. So you're going to start seeing people, the consumer starting to really tighten up. All right. You're going to see the job market, people going back to those crappy jobs that they left, they didn't want to go back to, but they're going to be forced to. All right. So those are a lot of the context that's coming. The Federal Reserve, hopefully what the Federal Reserve is looking at is they're saying, okay, we're going to raise the federal funds rate next meeting by 50 basis points. Then they're going to monitor things, because you're going to see, I'm pretty sure we've seen the inflation peak out. You're going to have a lot of naysayers in this, but this is my opinion. Yes, my opinion. Okay. So I think a lot of this is going to be adjusted, and the inflation rates are going to come down fairly quick. Okay. So that's my assumption, mainly because of the energy piece of the puzzle. All right. We still have supply chain issues, but being 4 months out, I don't think that's a short enough duration. I see Q4 of this year where things really start coming back in line. So I'm also not a proponent of paying a lot of costs when you're getting a mortgage. I've seen people paying, $5, $10, $12, $15,000 to get a mortgage. Guys, you're getting money. Unless you definitely are going to keep that mortgage rate for 10 or 15 years, you might want to look at a cheaper option not to spend that money. I know the interest rate kind of right now just hits you in the face because it is way up there. But I'm pretty confident that within the next 6, 8, 12 months, you're going to have a little bit of reprieve in rates. It's going to be able to get you those rates that you're looking for without that substantial cost. So I'm trying to put a widget or something on our website to say, what mortgage rate would you need to possibly refinance, and put that out there, and then we can put you in a database, and if and when rates hit that rate, we'll be the first to reach out to you so you don't miss it. So if you like that concept, let me know down below. So that is it for right now. I think that's Alex, if you would send me a copy of the loan estimate you have. Let me see if I can look at it and review it and say, hey, you know what, maybe I can offer you this or what. So just so you guys know, exciting news that we have. My team has finally moved over to Allied First Bank. We are now federally chartered. But the good news behind all this, we're still brokering out loans. We have over 120 lenders to work with. So not only now are we a bank, not only are we federally chartered, we can help anybody in the entire country. We'll be able to have the bank products plus be able to scan almost the whole country, the biggest lenders in the entire country, to make sure you're getting the best rate and the best terms. So if there's any other questions, please shout out. Montana. Hey, Montana, nice having you. Hope you got my email earlier. Good luck with all that. And if you hit any problems with your loan, please let me know. Good idea from NL. It's a good idea. Are you talking about a good idea to post on there so you guys can post in your rate? All I'm going to ask for is, if we do that concept, we're going to need your email address and what rate you're looking for. But behind that, we're going to need to know a little bit of specifics so we can tie in your rate to your specific loan. So there's going to be a little bit of data in there. We don't sell it. We use it just as our database to make sure we watch you. There's also a feature on our website that a lot of people don't even realize. Let me go to my website right here. If you go down here, you can also track rates on our website right here. But if you go down here, and where to go? Right here. This is the coolest thing. And I used to promote this, but I'm not promoting it right now, and I don't know why. You can plug in to figure out what your house is worth. Now, this is the most awesome system that I've ever come across. I personally use it. I subscribe to it, and I have 500 memberships. So use them up, guys, because this is what happens. You can put your information in here, and it'll actually tell you what your house is worth. It'll give you all basically the legal piece of the puzzle on your home. So if there's any liens on your home, you'll see it. You'll see your current mortgage on there. You'll see if you were to rent out that thing, how much could you get? You'll also get alerts if there's refinancing opportunities for you. You can get analysis of the value of your home from a realtor. There's a whole bunch of data that you can do there. So just go right here. It's called HomeBot. Again, it'll just give you some generic information, but if you put in your email address, it'll open up the whole broad spectrum for you. So that's it, guys. If you got anything else, let me know. Let's go back and see where the chart is. We're now down 30. It's continuing to drop. As you guys were here, I don't know if you noticed, but when we talked about this just a couple minutes ago, we were down 22, then 25, and it's continuing to move. So we got Montana. What do you got there, girl? Still might come to you guys for instead of, because of origination cost is different. Let me know, but check your emails in detail, Montana, because you kind of got me confused last night. I didn't know if you were going USDA, VA, FHA, conventional. So if you would just reach out to me. But rates are moving every day, all day. Next question we got here is: I'm in the process of buying a home from owner to buy with FHA. My loan officer says that any down payment assistance out of the table at the moment. What is the mortgage rate for FHA at this moment? Here's I have Pablo. I have a fantastic idea for you how we could get you into that house probably with no money down. The mortgage rates on FHA vary. It depends on your loan amount, the house's value, your credit score. So if you would do me a huge favor, I don't want you giving me yours, but shoot me an email. And what I want to do is I want to actually talk to you personally. We can, since it's a family member, we can most likely buy it from them in a way that I can explain to you. I don't know what just happened there. Actually, I just hired that gentleman to help me in YouTube. But I can help you because it's a transaction from a family member. I can help you get into that with probably no money out of your pocket, no money down, and we'll scan the whole country to make sure we get you the best rate. But I need a lot of data from you, so please email me and I'll give me your phone number and I'll personally call you when we're done. Give me about an hour, I'll call you and we'll go through everything. So any other comments for today? I got some more exciting news. I'm helping to get this thing to the next level on YouTube because what you guys are doing is phenomenal. But wonder if we came in here and there was 200, 300, 400, 500 people. That's what I'm trying to do. So I am working with Daryl Ives. If you guys don't know who he is, he's Mr. Beast's personal coach and trainer. We just hired him to come on to help us take all this to the next level. So that is it, guys. I got to run. I got a lot of stuff to do, and because of the transfer over to the bank, I'm really tied up a lot of times. But if you email me, I promise I'll get back with you as quick as I can. So thanks for watching. God bless. Take care. I'll see you tomorrow morning.